I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
I'd like to welcome Gary Savage to the show. He's president and CEO of SmartMoneyTrackerPremium.com. He's speaking to us from Las Vegas. Gary, currencies around the world have really made some noticeable changes the last few days. Can you maybe explain what's going on?
Well, the last time we talked, I said that, that I wasn't exceptionally bullish on the dollar, but I did think it was going to have a counter-trend move, because I thought that the euro would drop into the Brexit boat, and that appears to be what's happening, and I believe this is going to have some connotations for the rest of the markets here over the next, I guess it would be 7 trading days. So what I'm looking for is the euro to continue down and get some kind of a panic sell-off, maybe into next Wednesday or even into next Thursday. And then I think no matter which way the vote goes, whether it's stay or leave, I think the euro bottoms right there. And that's probably going to catch a lot of traders on the wrong side of the market. And then, of course, that would mean that the dollar would top. And so I think there's potential, because a lot of times the stock market will form an intermediate bottom along with the currencies, and this can flip-flop. It can be either the dollar putting in an intermediate bottom or the euro putting in an intermediate bottom. And in this case, it might be, or it's going to be the euro. So I'm kind of watching the stock market here. I want to see if we break down pretty hard over the next 7 trading days, and if we go below that May low and maybe drop down to the 200-day moving average, which is a little below 2020 on the S&P, maybe down to 2,000, and that would have the potential to for the stock market to possibly form an intermediate cycle low right along with the euro next week. So I'm tracking the stock market pretty closely here. This is also going to have connotations, I think, for the metals market. It looks to me like the metals have formed an intermediate cycle low, and we're rallying out of that move. Now, what I would like to see is, as the euro drops aggressively over the next 7 trading days, and presumably the dollar rallies pretty aggressively, I would like to see the metals hold up and maybe just churn maybe sideways to slightly down. And then when the dollar tops, then I think the metals are set up to give us a pretty good rally. And I think everything would be set up to give us a pretty good rally, as oil is also moving down into a daily cycle low. So I think Thursday of next week is probably going to be a major turning point for a lot of markets.
A D-Day, sort of.
Exactly.
A decision day.
Mm-hmm. The currencies are going to reverse, and I suspect the stock market and the energy markets will also. And like I said, as long as the metals don't break down seriously as the dollar rallies, as long as they just kind of churn and maybe drift lower, then I think they too will be set up to rally, which is going to catch a lot of people off guard. People have become conditioned to expect the metals to go opposite of the stock market, and that has not been the norm over the last 16 years. Usually, everything goes up together, and I think that's going to be the pattern here for the next several years, is that everything will go up together.
Well, right now, what we're seeing in a lot of cases is that gold goes down on the same day that the equity markets go down. Traditionally, gold usually goes up.
Yeah, now, the last several days, it hasn't been that way. Gold formed that intermediate cycle low 3 3 weeks ago, 2.5 weeks ago, I guess. And it has been rallying, and it did go up with the stock market a little bit there at the very beginning of the month, but then the stock market turned down the day that the euro turned back down, and so stocks are following the euro down, whereas gold has held up. So it has decoupled to some extent from the dollar. So even though the dollar's rallying, gold has not turned and headed back down. And that's a good sign, and it's probably just, a fear trade. Everything else is falling, energy and stocks. So liquidity is coming out of those areas, and it's going into the dollar, and to some extent into gold, into metals. So, as long as the metals can just hold up here and maybe just turn sideways to slightly down, then I think they're going to be set up for another leg up once the dollar tops next week.
The threat that the Brits may vote to leave the European Union is affecting German bonds. The German 10-year bond now trading in negative territory. Is the Brexit whole thing playing into the markets and into the prices for gold and the U.S. dollar?
Well, I think it's a major trigger event this summer, and that's why I think we could get an intermediate cycle low in stocks, and we already got one in gold, and also in the euro. Just a major trigger event. And once we get past it, then I think the markets are going to reverse their current trend and head in the other direction. We'll just get that uncertainty out of the water, whether or not Britain is going to stay or not. Don't know that it really makes that much difference either way. From what I understand, that there's no major changes that are going to have to be made the very next day, even if they do elect to leave. So, in some extent, it might be a bit of a non-event, but leading up into it, the markets are going to get a little panicky.
I know in Germany they're a little scared because immediately it would cost Germany something like $50 billion to cover the loss of revenue from Britain.
That one's, I'm not a big fundamental guy, so you probably know more about that than I do, but
plus people do trade on emotion, don't they?
They do, yeah, and right now people just don't know what, we're not sure whether they're going to stay or leave, and the market isn't sure what's going to happen, afterwards if they do elect to leave. So, this one was pretty easy to spot from a mile away. You knew that the markets were going to get a bit panicky ahead of this event, and so far they are.
And of course, traders hate uncertainty.
Exactly. I do think we're going to get a big relief rally once we get past this, though.
Have the Asian markets reacted at all to it, or is Asia its own beast in a case like this?
The Nikkei does seem to kind of go to its own drummer. It kind of trades opposite of the yen. So when the yen is falling, the Nikkei does pretty good, and when the yen's rising, the Nikkei struggles. But both Japan and China, their markets are kind of mirroring the U.S. markets right now too. So it's just a global event. The whole world is a bit nervous about this, about the Brexit vote.
We'll have more with Gary Savage right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Gary Savage. Gary, the International Energy Agency and OPEC are both predicting that by the end of the year, oil supplies will either be a slight surplus or stable. Is that what your outlook is for oil?
Yeah, that's been my outlook for some time, maybe even tight supplies. I know we've discussed this in previous interviews. The market kind of got obsessed with this idea of a glut in oil, and And my feeling was is that we had done enough damage, enough companies had gone out of business, gone bankrupt, that we were probably going to see some supply constraints as the year goes along and as we get into 2017, that I think we put in a final bear market bottom early in the year here, and I think oil has started back up. I really doubt that we're going to go back under $40 again anytime in the next several years, and maybe not ever again in our lifetime.
Oil is trading around the $48 mark, down from the high a week ago of 50 plus. Is it going to stabilize or go down even more?
Well, I think oil is the same as the stock market. I think it's moving down into a daily cycle low, and I really doubt that that's going to stop until we get past the Brexit. So I would think we've probably got at least another 7 trading days, and but then once we get through that, I think oil will also reverse, and I don't expect this intermediate cycle to top in oil until we at least reach the $56, $57 level to $60 to $61 level. So I think there's still more upside yet in oil, and I think we'll get that once we get past the vote.
Have you been surprised about the strong demand for oil in North America? It seems to me that the driving season started very early. Mild winters for most of the West. They did have some late snowstorms in the East, but not enough to really change the attitude towards driving for your holidays, maybe even perhaps because it's cheaper than flying.
Yeah, and that's kind of been another theory. I know a lot of people are obsessed with the idea that Europe is going into recession or that the U.S. is going into recession, which I just don't see at the moment. So I'm in the camp that says that I think the economies are going to start to pick up again. At bottoms, things always look bleakest. That's when the most people are bearish or expecting, a recession or a recession to get worse. And then that's when things turn and go the other direction. So I'm in the camp that says I think that demand is going to pick up over the next year. So I think that's just going to be, just another factor in the plus column for oil over the next couple of years.
One of the factors in that, of course, is that the Chinese, just like the U.S., are now in love with SUVs.
Yep, exactly. And they have been stockpiling oil at these cheap prices, and they're stimulating too. So again, the same thing. A lot of people think that China is going into a recession, and whereas I'm in the other camp, I think they are going to stimulate enough to stay out of recession, and I think their economy is going to pick back up again next year. So, just more on the demand side, in my opinion.
I saw a statement from the Chinese government just a week ago or so saying they thought they had room in their budget to stimulate the stock markets again if they had to.
I think all central banks, pretty much all of them are doing QE. So that has been, in my opinion, the main driver of stock markets for the last 6 years is central banks all over the world are just printing trillions of currency units, and they've got to land on something. So it looks to me like it's ready to land on everything: stock markets, commodity markets, gold. So I think everything goes up together over the next several years.
China has been stockpiling gold for the last 5 or 6 years now. Do you see them going to a gold-based currency?
No, I think governments will fight tooth and nail to stay on a fiat system. Gold is insurance. It's an emergency backup. If a currency crisis were to occur and if it were to start to escalate out of control, gold is your fail-safe to stop the currency crisis. So if your currency is starting to collapse and you can't get it stopped, then you can always back your currency with gold, and that would be one method to stop a currency crisis. So I think central banks are accumulating, especially China, Russia, are accumulating gold as an insurance against a possible currency crisis, because realistically, every central bank in in the world is printing on a scale never before seen in history. So, you've got to know that at some point there's going to be consequences to this, and I think there are some governments out there smart enough to understand that when the consequences come, they need to have a backup plan in place. So, they'll fight tooth and nail to stay on a fiat system as long as possible, but if it comes down to it and the currency is on the verge of hyperinflating, then gold is your insurance against that, and it's the backup plan to stop the currency crisis.
Are there concerns in the U.S. that the dollar is overvalued?
I think it's grossly overvalued. I don't know exactly how many trillions we printed, but it was a lot, and I think there's got to be consequences to that. And the common sense would tell you that the consequences are not going to be a strong dollar. Never in history has that been the case. So I know a lot of people, at the beginning of the year, they were looking for the dollar to go to 110 or 120. I think it's going the opposite way. I think over the next maybe 5 or 6 years, I think we're going to have to suffer the consequences of all that money printing, and I think the dollar probably double topped this year, and we've probably started another cyclical bear market that may still have another 5 or 6 years to run before we bottom yet.
How does the U.S. fit into all the other nations that seem to be trying to drive their currency to zero?
Well, I think everybody is trying to lower their currency. I think when we hit 100, I think that was the line in the sand for the Fed. They didn't want the dollar any higher than that, and you can see they had no trouble pushing the dollar back down since then, even though the U.S. has started raising rates and may continue later this year. I don't think we're going to raise tomorrow, or probably not in July either, but it appears that the Fed has had no trouble holding the line at 100 in the dollar index and pushing the dollar back down.
Canadians are curious about why gun stocks in the U.S. have skyrocketed following that mass shooting in Orlando. Why are they going up?
Quite the tragedy.
Why are the gun stocks going up?
I'll let another guest speak on that. That's not my area of expertise.
Yes, it is a tragedy no matter what side of the line that you are when it comes to politics. I can't see anybody saying this is a good thing. And of course, Canada shares the sorrow of Americans over that incident. Gary, anything else you wanted to add to our conversation today?
No, I think we covered it all, Jim.
Thanks a lot for chatting with us.
My pleasure.
My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. He was speaking to us from Las Vegas. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. If you have any questions for the show, you can email them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.